Welcome to another episode of The Brand Called You, a video and podcast show that brings you leadership lessons, knowledge, experience, and wisdom from hundreds of successful individuals from around the world. Today, it is my privilege to welcome a very, very senior corporate professional from Canada, Paul Haggis. Paul, welcome to the show.
Thank you.
Paul is the chairman of Alberta Enterprise Corporation. He has been on several corporate governance engagements in Canada. He is a former president and CEO of OMERS. He is a member of the Canadian Armed Forces and retired as an honorary colonel. And importantly, he is a fellow YPO member. So, Paul, what would you say are three key milestones in your life or your career?
Well, I had these questions in advance. Thank you very much. So I did put some thought to it. And I would say the first thing was cadet training as a youngster.
Mm-hmm.
So I started as an air cadet in a small town of Belleville, Ontario, 608 Belleville Squadron, and went up through that training program and became a leadership position as a teenager with the military support that provided. So with that, and then an early commission into the Air Force Reserves and then the RCAF, I had an opportunity to be in positions of responsibility and authority early. And that was very important for being in a public place, being in front of troops, if you will. As a drill instructor and as summer camps as a teenager. So this gave me an opportunity to be in a leadership role very early.
Okay.
I think the next thing, I had a number of banking jobs, and of course, you marry the right woman is always helpful. And I
Absolutely.
did 1977, and money is still the key to everything, really. But the next thing was I got to work for MetLife. I was a treasurer, and then as events happened, I got a CEO of all our non-insurance operations.
Okay.
This is the real estate market in Canada where most of our exposures was collapsing in the early 90s.
Okay.
And this caused a lot of real pressure. As a first CEO, happily with a great company, a Metropolitan Life, and great mentors. So first time being a first-time CEO. And then the next time leaving MetLife after working in New York and across Canada, I had a chance to turn around a company called Alberta Treasury Branches, which was a 150 branch regional bank that was a crown corporation owned by the province of Alberta. I was really, really in trouble.
Okay.
And having a freedom to actually go in with a brand new board, a brand new crown corp, with our deposit base guaranteed by the province. So I didn't have to worry about analysts, or I didn't have to worry about a run on the bank, but I had the freedom and opportunity to do a real turnaround and to change culture.
Very interesting.
And that turned out to be wonderfully successful.
Wonderful.
Then I think the other thing of late, anyway, relatively, was the whole Canadian Pacific saga of the Ackman-led and Paul Halal-led proxy battle to get a hold of Canadian Pacific, which was a languishing company, poorly led, and without the board actually holding management accountable and allowing for mediocrity. And it was basically a shareholder revolt.
Okay.
And I was recruited onto that as a dissident nominee. We won the vote in May of 2012. I was elected chairman, and then we hired Hunter Harrison. And Hunter Harrison has to be the finest operating executive I have ever known.
Wow.
And the turnaround on that company was just remarkable.
Incredible.
And so that whole thing brought to mind the question of accountability, of shareholder activism, and what can happen when you got the right person running the show. And that was a very, very powerful example of what can be done.
Correct.
So I put that together as the people issues and the opportunity to participate in what was a historic event in corporate governance in Canada.
Amazing. Amazing.
It was really, so I'll put those things as one of
Very fascinating.
key elements in my maturity as an executive.
Very, very fascinating. So, Paul, let's talk a little bit about what's happening in banking and corporate governance in your part of the world. You've been a banker for a large part of your life, other than, of course, being a senior armed forces officer.
Right, and Home Capital now, I'm on the chair of the audit committee of Home Capital, and been involved in the investment side in a number of different places. So, yeah.
So, banking has changed dramatically. I mean, when I started working, there'd be long queues at the bank and I'd go and draw some cash. And now I haven't seen the inside of a bank for the last so many decades. What, according to you, have been some of the significant changes in banking?
Well, fundamentally, banking hasn't changed in the sense that you have to have the character, the capacity, the credit, those aspects of, you have to have faith in the organization because you're going to give them a deposit. So the basics of banking, of leverage, of deposit taking, and recycling that deposit in the form of lending, and how those loans go towards various parts of the economy, that's been the same as it's ever been.
Okay.
What has changed is the way it's done, the speed, the ease, and how it's so much more efficient. Still, bankers make the same dumb mistakes, and you can look at lending into the real estate market to excess, lending into deal-making markets to excess, and pushing the credit bubble till it bursts. It happens over and over and over again. I often think of aviation, where aviation is a cumulative learned science. We start with Wright brothers, we end up with it. Now we have Boeing 747s, and we have fabulous airplanes that are very safe. Bankers make the same mistakes over and over and over again. So, so that aside, risk management has become much better, and the regulatory regime, especially in Canada, has become much better. What's changed, though, is the ability to operate from your laptop, which I'm speaking to you now, to have access to information, the scale and speed. It's so cheap, you can trade for nothing. The disintermediation of third parties into controlling your own space here has been just remarkable.
Interesting.
So I would say that what has changed is the ability to facilitate this. The fundamental principles of banking are the same, but our ability to actually disintermediate, to have greater control, the quality of and the immediacy of it, and it's become very, very inexpensive as a result. I think about MetLife when I worked there in New York at 1 Madison Avenue. The elevators were enormous because when the bell rang, thousands and thousands of office workers would leave all at the same time because everything was done by hand and typists and so on. Now you think of the efficiency that banking has, the expense ratios are so much cheaper because of technology.
Correct.
And yet we're the beneficiaries as customers. It's fabulous.
Yeah. And those elevators are probably empty now.
Yes, the equivalent of, Well, you think of what the transactions you do. You can operate and interact with the bank 24 hours a day at your own timetable. You have infinite support tools of a variety of programs and whatnot. So it's much better for the individual. It's much better than the days when it was in Canada 10 to 3, and you would literally doff your cap and stand in line.
Right.
It's a complete reversal.
You're right.
And the portability is much easier. Although still people don't move banks as much as you'd like to think.
Correct. That I agree.
There's hot money that'll go for a few basis points in deposits, but the core banking relationship is pretty sticky.
Very well said. Over the last 10 years, you would have seen quite a lot of digital revolution happening in the banking world, and you continue to be involved in the banking sector. What are your views on the digital revolution actually bringing about financial inclusion?
Like you think about fintechs or Rocket Mortgage and this kind of thing.
No, fintech, just fintech.
All of this is an extension of disintermediation, so that the opportunity that the big banks are in control, that these individuals with not a lot of technology perhaps, but fundamentally when you lend a mortgage, you have to ask questions You have to understand the risk. You have to assess that risk. You have to understand the security. You have to document that. So the efficiencies of the back office certainly speed up the process. But you still have to, somebody's got to look at this house. Somebody's got to assess the credit and the capacity and the character of the borrower.
Correct.
And a lot of that stuff, especially in the alternate housing market or alternate lending market, there has to be a decision maker, and it's still a person. There's artificial intelligence which is supporting that. But for all the talk about rocket mortgage and everything's done in 5 seconds, you look behind that, there's a lot of people doing that work. So again, things are facilitated with technology enormously, but the fundamentals of the decision-making process, the capacities, the C's of credit are still applied.
Right. Okay. So we're going to, I'm going to ask you a couple of questions on private equity before moving to the next segment. You have run large private equity funds as well. What are some of the key metrics that you look at before making an investment?
For private equity, yeah. Invariably, it's the track record of the general partners. One thing about private equity, there's thousands of private equity general partners out there trying to raise money. Thousands.
I agree.
The number that actually make money are very few at the top. And for institutional investors to get into the private equity of the KKRs or Apollo and Carlyle and these very big players is there's a lineup to get in, and quickly these funds close. The private equity space, especially when they become big, they become fee driven, and you look at the fees, just the 2 and 20 scenario is not necessarily good. It's supposedly alignment of interest, but when you've got $50 billion, all of a sudden, you're ranking $1 billion before you even get out of bed. So those kind of things they become almost too big. But management is absolutely the key to life. And the thing about private equity, especially in infrastructure, is you have to know how to run a business.
Right.
You have to know how to own a business. It's one thing to be a lender. It's another thing to be an owner. And to think and operate like an owner is a whole different skill set. And for private equities, to be an owner of a business, to be a board member, to supervise and to oversee management without crossing the line, to hire the right management, to be skilled owner is a very key element to the successful private equity side. So KKR, for example, has their first 100 days when they buy a business. They have operating skill sets that they bring onto the table very well. So I always said to our guys at OMERS, doing the deal is the easy part. Owning the company and realizing on its potential is the hard part. And that takes a long time.
That's it.
So we have to be really careful about private equity, and it's really keyed on those principles of how these people have the skill sets to be owners.
Interesting.
And a lot of them don't. They're financial engineers, okay, we'll use leverage or this kind of thing. And very few actually make a lot of money.
I agree.
So as an investor in that, as an institutional investor, you got to be really watch it.
Yeah. In fact, someone I was talking to actually said, investing in private equity is like the Russian roulette. You don't know.
It can be, yeah. And the past is not the future. So very targeted people within their skill set. And I always thought about infrastructure being, it's going to be a stable rate of return and it's perfect for pension institutional investors. But since when do these financial engineers know how to own and operate an airport?
Correct. Yes.
Or a port or a railroad or a pipeline? These are big operating enterprises. And it's easy to buy them. It's a lot different to own them.
Absolutely right. So I'm going to now move to the next segment of our conversation, which is, your role as a board member. You sit on several boards. You have sat on several boards. I know that.
Actually, over the last few years. Yeah.
I agree. My first question to you is that given the kind of responsibility that goes with a non-executive board member, what do you look for before you accept a board position?
I guess the opportunity of the business,
Mhm.
the quality of the management,
Mhm.
where the company is in its competitive space, and what can I do
Mhm.
to be supportive of management? What can I bring to the table in my experience that can be meaningful? Recognizing extremely important
Mhm.
that board members do not run companies.
Correct.
Directors do not run companies.
Mhm.
Management run companies.
Mhm.
My job as a director is to make sure that management is doing its job running the company.
Mhm.
Not my job to run the company.
True.
And not my job to create a special committee to oversee something special, like a technology group or an M&A or this or that. And that's the default. So if all of a sudden, we're not seeing our numbers, well, let's form a special committee, and the board will hire its own advisors to supervise management.
Correct.
And ultimately get in the place of management.
But yet,
Directors don't like how it's
continue
going.
to hold the fiduciary responsibility as a board member.
Now, my responsibility as a director is to make sure that management is achieving and delivering the potential of the organization to its shareholders and all its stakeholders. Not just shareholders, but everyone that has a stake in the company.
Mhm.
And if management isn't doing that, then my job is to make sure that we get different management, change management, or incent management properly, or do whatever it takes to make sure that management does it. And this is what's the big lesson on Canadian Pacific. The old board circled the wagons around Fred Green and the management, even though it was patently obvious to everyone that that company was not being managed to its potential.
Okay.
Shareholders were incredibly upset, so upset that they in fact had a special board meeting and threw out the old board to get a new board in to change management.
Mhm.
And my job as a director is to make sure that management has every resource they need and my advice where I can give it. But at the end of the day, it's not up to me, it's up to them. And I keep track of are they doing it. If they're not, then my job is to get new management.
Well said.
That's it.
Well said. Well said. I'm going to now move to the last segment of our conversation, which is some questions
Sure.
for you personally. Paul, as you look back over such a successful career in so many different areas, from where you stand today, what does success mean to Paul?
I think, those classic things of, have you left stuff better than you found it?
Mm-hmm.
Do you have lasting relationships that and people around you that you admire?
Mm.
I think that's, that would be success, really.
Okay.
I mean, there's monetary success and so on, but what really counts is, do you have long-term friends that you admire and you want to be around, and they want to be around you?
Correct.
So that's what I look back on, the relationships I built up over many years and various seconds. And I value those highly. And that I can say, well, there was Brian Heshey, who's a former chair of Alberta Treasury Branch. He said the attributes of successful people is that they give more than they get. They have a sense of humor, and they play to their strengths.
Wow.
They don't try to fix their weaknesses.
Wow. Very interesting.
Isn't that great? They play to their strengths, they give more than they get, and they have a sense of humor. And he used the example of play to your strengths, where his wife was chiding him because he was always losing his glasses. He was starting to get reading glasses. And she said to him, Brian, you need to get organized. And recognizing his strengths, he bought 10 pairs of glasses.
Okay. What a great example.
I think that's
fabulous.
Isn't that great?
It's fantastic. It's fantastic. So a follow-on question from there is that who or what has inspired you?
Some people I've worked with have been inspiring. My mother, she grew up, still alive, 91, soon to be 91. She grew up in Mirror, Alberta, in the prairies here, 1930s, in the Depression.
Wow.
And you just can't imagine how terrible it was. People complaining about COVID and what we're living through, nothing compared to being hungry, isolated in a subsistence farm in Alberta in 1935. And she went on to still see a sense of humor and this great health, and attitude is everything. And some people, I think, maybe don't have all the CV,
Yeah.
all the degrees or whatever, but they have the right attitude.
Yeah.
And this is kind of be inspiring. I've had some military friends who are really inspiring for going above and beyond and doing extraordinary things. I traveled with the military in the 90s in terrible places, actually. And seeing people do what they do, kind of a thankless job without recognition, but they do it extraordinarily well and without complaint. This is, the ethos that is inspiring to say, well, how can I learn from that? How can I, if I could do half of what those do and not complain, it's remarkable. Great leadership in business. Claude Lamoureux, who I work with today, he really revolutionized investment in the pension business with Ontario Teachers Pension Plan Board to disintermediate basically fund managers, third-party fund managers, and bring it in-house when he had scale to be able to do that. And I say that the imitation is a serious form of flattery, I did the same thing when I got to Omers. So I disintermediated a lot of third parties and brought it in-house. To some consternation initially and some lousy headlines, but I see my own words coming back to me from the Omers management today. So
Fabulous. Fabulous.
I think that I can say, historical figures that I know, but those are the ones that I think my mother, my boss.
Fantastic. So I've got time for one more question for you, and I've been debating on what should I ask you, but I think I'll go with asking you, given how amazing our conversation has been, that what have been some of the core values you have always believed in?
Well, I hate to sound kind of corny about this, but the values of honesty, of integrity, of work ethic, of loyalty, commitment, tenacity, transparency. Those are things that last forever, right? And it's reflective of what you find inspiring with people that demonstrate day to day, hold true to the values of honesty and integrity, and wishing the best for people, being helpful, giving more than you get, right? Giving more than you get, leaving the companies that you work with better than when you found them, going to the park and you see a bit of litter, you walk over and pick it up and put it in the garbage. Nobody asked you to do that. You just do it anyway. These are values that leave everything a little bit better than you found it.
Fantastic.
Well, if everybody does that, then we're better off.
Very nice. Paul, thank you so much. It's been such a pleasure speaking to you. I loved your comments about give more than they get, play to your strengths, have a sense of humor, and what you said your mom taught you, which is attitude is everything. I think it's such an amazing kind of an advice that she gave you, and I'm sure the thousands of our listeners are going to take a lot away from this conversation with you. Thank you again.
Well, it's my pleasure. Thank you for having me.
Thank you. Thank you for listening to the brand called You Videocast and Podcast, a platform that brings you knowledge, experience, and wisdom of hundreds of successful individuals from around the world.
Do visit our website www.tbcy.in to watch and listen to the stories of many more individuals. You can also follow us on YouTube, Facebook, Instagram, and Twitter. Just search for the brand called You.